When you're riding a bike for the first time, how do you start? With training wheels. When you're going bowling, how do you start your first couple of times? With the bumper lanes. The same thing is true about trading. And in this video, I'm going to show you what I mean. Hey everyone, welcome back to the channel. I'm DD Trader, and I wanted to give like a tip for new traders. And I think that new traders get into the market expecting to be like trading like the pros. And if you think about it, it doesn't really make sense, because when it comes to so many other things, we start easy. When you shoot a basketball into a hoop, you know, your first couple of times, you get that little Tykes one and you shoot the low one, right? You get roller skates and they have those things on the sides, you know? That's how it has to be when you're trading as well. You need to get in to the market and trade more like a beginner. And that means you need to give yourself a little bit bigger of a cushion. And what I'm talking about is your stop loss. You know, I'm sure you've watched videos on the internet talking about these sniper entries and having the best stop loss, and it's great and you want to get there. But if you're going to keep a tight stop loss when you're not so experienced in the market, you're going to lose a little bit more than you should, or maybe probably a lot more than you should. So what I recommend is to have a lot of room with your stop loss when you're trading as a new trader. And let me show you exactly what I'm talking about on the charts and show you how to deal with it and how to trade with a bigger stop loss. So let me show you this GJ trade over here. And you know, the market was going down and then it kind of bottomed out over here. Here it's making bottoms, here. And we're seeing that it's kind of bottoming out, and it's possible that it's going to go back up. So we're here on the 1 hour chart. And let's say you want to get in, you know, around here, around this breakout. And let's say you were a little bit more conservative there, waiting for it to actually break past these highs. So you wouldn't get in until around there at that line, which is around here. So you're going to make that trade and you're going to wait till here, and you're going to probably get a pip of spread. So you're not going to get in until around there. Now, where would you put your stop loss? Now, you might think I want to put it, you know, right under this line over here, like this diagonal trend line. And that'll give me my best chance. I'm only risking 27.9 pips. And, you know, I have like 3.05 or whatever it is. I'm going towards, you know, maybe till here, maybe even higher. Maybe I'm going to say it's going to go till here, which it eventually did, as you see, like this is exact. So I don't know exactly where you're targeting, but the question is, where do you put your stop loss? So, you know, this is a really tough spot to put your stop loss over there. And depending where you're targeting, you could have been stopped out, you know, when it reaches down here. Now, it's possible you would say to put your stop loss right under here. I think that might be a better spot, right? That's a 50 pip stop loss. Now, so how are you going to have your risk to reward ratio that you like? So first of all, you know, when you're starting off, you know, just to start understanding how to win, you might want to go for less than the big risk to reward ratio. But even this one, you know, you were able to get it over here. It did go, because this definitely was a turnaround in the market. And, you know, GJ does kind of fly like that. So it's possible to even, you know, cover under here. But let's say you did cover it over here, right? So let's just make it a little bigger. Now you're covering under here, and what happens? The market goes up and then it comes back down over here to kind of test, you know, these lines pretty much exactly. And then it goes up even more. So a lot of traders are going to move their stop loss right here, because like if it went down to here and then got pushed up with that bullish wick and keeps on going higher, why do I need to protect it all the way down here? I'll tell you why. Because you're a beginner. And I would recommend that, you know, you don't follow price action with your stop loss. Keep it down here. That's what you originally thought. And you see in this case as well, it eventually did go even lower. You know, especially in a pair like GJ, it's very volatile. So even though it hit here, just in one move, you know, it went close, and then in 2 candles later, you know, it totally took all the profit away and would have even stopped you out if you moved your stop over here. So at least we could see over here that when it's coming to trailing, the trailing stop, I really recommend against that when it comes to new traders. You know, the more you're experienced, the more you could take off those training wheels, the more you could get comfortable, but you need that breathing room. And that's why I recommend to traders as well to swing trade, because you have those 30, 40, 50, 60, 80 pip stop losses, and you're going for the bigger moves, and the price action is really the same. That's how you want to think. Get yourself comfortable with winning. Get yourself comfortable with being in the market and not trying to run out of the market, and show yourself that you could, you know, okay, it's not the type of win where it's a sniper entry and you're going for the best risk to reward ratio, but you could do it. Now, you might say, how am I going to get into the market over here and have a 54 pip stop loss, you know, and make some money? So I'm sure you know this, but you go into like something like my FX book position calculator, and let's say you have a $10,000 account, and let's say you want to only risk $500 on a trade, and it's, so you put it over here $500, and your 54.2 is your stop loss. You calculate, and that's 1.14 lots, and that's what you would risk over here. And it would, this would be your $500. When it'd be down here, it'd be about $250, and when it would go all the way down here, you would lose your $500. And if this is a 1.65, I wasn't even, you know, saying that this is where you would target, but let's say it was 1.65, so you know that's, it's at least, you know, $1,100 for the win and $500 for the loss. So it doesn't really matter exactly how big your stop loss is. You know, it's something I teach in my course. You guys should check it out. It's helpwithtrading.com. It's free now for all my subscribers. Something I teach in my course is like, you'll look on the internet and see, I got 300 pips this month. Great. Like, how much did you risk? Like, a pip doesn't really matter if you're going for 200 pips and you're risking 100 pips, you know. So pips don't really matter. You could divide the pips and you could trade a smaller position or a higher position. So if you're a new trader, take this advice, I believe, and, you know, be easy on yourself. Gradually get into it. You don't need to go for those amazing sniper entry trades. Just keep your mind on the chart and keep your eye on the ball, and really go step by step, and you'll get better and better as time goes on. So I hope this video gave you guys value. If it does, then please give it a like, and subscribe to this channel with a notification bell so you could see the next video. All right, guys, DD out.